everybody. Welcome to TraderMerlin Show. It is your Thursday edition. We are flying through this week. It was I was writing a date for today. I couldn't believe it was actually Thursday. So hello, everybody. Hope you had a great trading session out there, especially that last hour of the market. You gotta love the just ridiculous rips to the north side. Hello, everybody. And Natalia, Izzy, Tomasina, Big Eb. Good to have you back, my friend, and not bad whiskey. Good to have you with us as well. Natalia, I think I just saw you in the Traders Army webinar just a few minutes ago. Good stuff out there, too. All right, Tillie Allison will be our guest today. In talking to Tillie before the show, I said, what do we want to talk about today? She said, you know what, one of the big things I had issues with was looking at bad habits. So we'll talk about bad habits today because I sure as heck have them. I know that you guys probably have some too. So we'll talk about addressing them and overcoming them. And as the question that came in from, I want to say from Natalia, yeah, let's talk about some of the good habits too that maybe we can instill on ourselves as traders. So let me get things started today with your market update. We'll start there and work our way into the Tillie Allison portion of the show. We'll do some chart analysis as well. So if you have a specific chart you want us to look at, let us know and we'll take a peek at it. All right, I'm going to go through this rather quickly because it's nothing exciting. I was going to skip over some of the symbols, but Bitcoin was noteworthy simply because look at it's a hammer formation. Some would actually call that a dragonfly doji. For those of you who are candle practitioners, that's this last candle here. We closed at 93.35 on Bitcoin. It was a slide of 0.43%, but it was in reality down much more than that earlier on. So a nice potential reversal sign for Bitcoin here. Of course, we have to wait and see what happens tomorrow. Gold, 1774 is where it closed, but really not that big of a deal. It was a slight decline. S&P. The candle by itself looks good, but it's really, take a peek at the 5-minute time frame here, guys. This was the rip at the end. It went from right around 30.35 all the way up to very near 30.80. So you're looking at a 45-point move in just under an hour. That's a pretty big move for the S&P. That pushed into positive territory on the day, as you can see, finishing at 0.8% move to the north side for the S&P. Russell just slightly better, up up to 1,409, a gain of 0.92%. NASDAQ also looking at a nice gain of close to 1%. It was at 0.87%, still above that 10,000 and almost closing above the 10,100 mark. Best performer on the day, though, was Crude Oil. Here's your CL chart. It's been the story of 3 weeks now where it seems to be bouncing between kind of $39 and $40.30. Right now, you're kind of in the middle of that range. Crude oil sitting at $39.04 as we speak. So that's your top 6 markets out there. Really not a lot that I want to dive deeper into. It was, to me, the best looking chart formation was on Bitcoin because you have a dragonfly doji there, which I think is a good one. All right, so you got no sound? Okay, good. You scared me for a minute, Terry. Someone, if you wouldn't mind, just type in for Terry to just hit refresh. It's probably a mute mic, but thank you. I'm seeing my levels pop. So anyway, that's great. Our guest for the day is becoming no stranger to the program. I have a feeling we're going to have her on much more frequently simply because she's great at what she does. She loves sharing market knowledge. She also is doing a series for TraderMerlin on Sunday nights called Tillie Allison's Market Outlook. Of course, I'm talking about Tillie Allison. Tillie, how you doing today? Don't forget to unmute that microphone there.
Hi, Merlin.
There you are.
Great to be here.
Look at that. I love the backdrop. A very regal setting, and that's one hell of a martini glass back there. We'll save that for Fridays, right?
Absolutely.
Nice, Tillie. Well, thanks for coming on. By the way, a big thank you, not only from myself, but to a lot of the viewers. Your the video that you put out on Sunday, which was Tillie's Market Outlook, a lot of people really liking that. Things found it very beneficial from an analysis perspective. So thank you for putting that together for us.
Absolutely. I'm looking forward to talking about it.
Oh, yeah. Oh, good. Well, let's start. I want to make sure we get to the topic du jour today because that, to me, I know people came specifically for that. It happens quite a bit where people come for the topic. And as you guys can see here, the topic is breaking bad trading habits with Tillie Allison. So what I want to do is I want to start there, and then we'll work our way into some chart analysis. So if you guys have charts, let us know. We'd love to get more analysis for you. So, Tillie, I know this was an issue for you starting off when you were in your early days of trading. It was for me as well. Start me off with breaking bad trading habits.
Wow. So I think everyone out there can, probably, if you manage your portfolio or actively trade, what are some of the things that you have been experiencing? Mm-hmm. Do you trade like you drive your car? Do you trade like you cook? And we typically don't trade like anything else. Trading is managing risk and identifying opportunities. So it's more like running a business. How do we run a business? And I started trading in 2003. And I just remember that I thought the more times I pushed the button that I would get lucky. And I'm just, and always have been, very outgoing person. And that's why I love doing the show. I love being with everyone here. And no, that really is not good for me in trading, because the more I push the button, obviously, if it's not a well thought out trade plan and action to take, then we all know how that's going to end. And so I would say that my kind of outgoing nature, my kind of, what do we call it? Fire ready aim.
Yep.
The fire ready aim mentality. And then, just being a button pusher, if you will. I like to push buttons, and I like to, have a good time. And I found out early on that's very expensive in trading.
Yeah, we all, here comes the cat. There's the cat creeping in. You'll get to see Tillie's gigantic fluff ball. You can hold up cat up there. Is the cat, you want to say hi? What's the cat's name? Look at that big old fur ball.
Baylor. So Baylor has helped over the years. Pets help in the office.
Mm-hmm.
They entertain us, hang out with us. What I found in trading is we really have to enjoy our relationships with people, because the relationship with the market, Mr. Market's like a bully, and Mr. Market wants our lunch money. He wants to harass us all the time. And, realizing that early on, I did not. And I think anyone that maybe looks at the market that way and understands how emotional it is,
mm-hmm.
and then looks to other things, friends and family, and really wants to experience life and enjoyment with people. And whenever it comes to trading, that's just strictly business.
Dogs don't talk back. Well, actually, mine kind of talks back. You threw the pet analogy in there. I'm gonna make everyone laugh, hopefully, with this story. Yes, pets are great. Nice stress relief. A nice way to get away. But let me tell you a great story about trading and cats. So my mentor many, many years ago was telling me a story about how he was in a trade. He actually was not at home. He had moved. Sorry, let me rewind. He wasn't at his trading computer, but he was at home. And he went into the kitchen to make some food, and his cat apparently walked across his keyboard. And back then, we used everything with hotkeys. So all of a sudden, you came back, and there's like 1,000 shares in his account in a very bad losing position. Like it was ripping against him. So he's like, oh, shoot, what do I do? He closed the position out. And then, this is where we get into the bad habit part. Out of disgust, I'll grab my Clik hat here and reenact it. He had his hat on, and he got so pissed off that this cat did it, and he lost a bunch of money. He took it, and he threw the hat. It fell down, landed on the keyboard, brought him right back into the exact same position he just got out of. So there's my bad habit story. I guess for the moral of that story is, don't let your cat walk across your keyboard or use hotkeys. And number 2, bad habits. Anger is a very, very bad habit, or frustration as well.
Absolutely.
What would you say was your worst habit, and how did you overcome it? Because we all have certain things that I know. I saw in the chat here. Different people have different problems. Where was the one that came through here? Pepe says, I used to chase trades, but that was his bad habit, but now it's gone. What were some of the ones that you did, maybe that you found to be the most costly to you, and how did you overcome them?
I think FOMO, fear of missing out, and wanting to catch every trade. So obviously when we're looking at intraday charts, there's little movement everywhere. And trading with leverage, a little move can quickly add up. But obviously, if it moves against us, it can, blow our account real fast. So I think fear of missing out was a big one, and not realizing that waiting for the better trades and calculating reward relative to risk and frequency, just well thought out trades rather than impulsive clicking the button, chasing trades, and FOMO, fear of missing out. I think that's something that I didn't realize was really controlling me. I didn't, and I think of it like I smoked cigarettes for years and years and years. And seriously, 20 something, I think 25 years I smoked. Not good. And so I can say that I lived in Europe, taught English, and that's where I really picked up smoking. So, European smoking is kind of, not as big as a faux pas, like here in the States.
It's a way of life over there. Well, you were in France, too. The French, they like to smoke on their cigarettes, it's a sign of very nice to do.
C'est la vie. So, fortunately, though, whenever I quit smoking, I'll never forget kind of the clarity in my mind of this is causing more problems in my life than the pleasure it brings. And I remember whenever I would, think about my years of trading, kind of that same mindset of the action that I'm doing is causing way more problems than the result that I want and the other action that I could take. So I think it's something that really helps me whenever I want to make a change is thinking about what am I currently doing? What's the impact it's having? And then kind of envisioning another action that could substitute it. And that can take some time, looking at yourself and saying, hey, this is what I'm doing. And it's really costly, whether it's financially or emotionally or physically. And then thinking of ways to substitute behavior. I found that that's probably the most helpful thing for myself personally that I've been able to do.
Mm-hmm. I think probably the most challenging part is first admitting that there's something wrong, right? A lot of times we don't think we have a habit, and that's why we have interventions where people will actually come and tell us, hey, you're doing this and this is bad or dangerous for you. In trading, it's a little bit different. I think everybody realizes that because there's nobody there to tell you, hey, you're doing this right, you're doing this wrong. It's you and yourself, which is part of the reason why I'm such a huge advocate for community and environment. To me, that is critical in having a bailout or a support group, if you will, of people around you. I'm going to read one here from the viewers. This is from Taylor. He says, every time I'm having a red day, I start chasing winners and my losses grow, but I can't stop trying to make a day green. This is a very common problem. I'll let you answer this one first because I have very passionate feelings about this one because I am a victim of it as well. How would you say to deal with this?
I do have losing days, and I can relate, and I understand how that feels. And I think knowing that frequency and having first of all, it's okay. Well, it depends on the trade plan, but usually it's okay to have a losing day.
Sure.
I know many traders, investors, professionals on Wall Street have losing days. But the important thing at the end of the day is how much did we lose, and is it going to be a big, hit on our portfolio and running those numbers? So today was a very difficult day. And I got stopped out a few times and had to get back in, but I stuck to the same exact rule. We'll look at the S&P 500. Today there was a low close to $303 a share. So having to understand, I think the big question is, if someone's in a losing trade or a series of losing trades, are their rules flawed? Did they get into that trade because of flawed rules? Mm-hmm. Or if they continue to re-enter the same trade with the same parameters, and expecting the market to eventually move in that direction, and then kind of looking at that difference. Is someone revenge trading, or is someone actually following a rule to get back into a trade because the market simply made a lower low than we anticipated it to? So this morning, the S&P, after it opened, it swung down about 9 o'clock Kansas City time, 10 o'clock East Coast time, retested the Globex low. So, that's going to knock out a lot of long positions, mm-hmm. and I got knocked out and had to get back in, and waiting for that setup to happen, could take hours, literally. Yeah. And, especially on a day like today. So I think really what we want to look at is, why is the trader feeling, the way they're feeling about the action they're taking? So it sounds like it's very emotional based behavior.
Sure. It goes back to common, just human behavior. I mean, none of us want to lose, and that if you stop trading for the day, so let's say you're down on the day, I'll make it up, you're down $500, you got a couple hours left in the market and you're frustrated, there's not one person in this room or alive will go, yeah, baby, I'm losing $500 a day. I can't. Nobody wants to do that. And unfortunately, and this is Taylor, this is how I fixed it. I was in the same shoes as you, and all of a sudden I would continue to trade that, and my $500 loss would now be $1,000. And now I'm really pissed off, so I'm going to double my share size. I might even trade something that's more volatile because I know I have to play quote-unquote catch-up, and all of a sudden now I end the day down $5,000. And I'm a freaking jerk at that point. I am angry, I'm upset, I'm psychologically damaged. So what you have to just come to grips with and understand is you are going to have losing days. It's okay. And I've mentioned this many, many times before. What I would encourage you to do, and everyone here, is just have a white blank piece of binder paper next to you, or printer paper, and write down the things that you're feeling sometimes during trading, right? Like I'm getting anxious about something. Why are you anxious? Because you're too big a share size, it's moving too fast, you're uncomfortable, you don't know execution. Whatever the case may be, you have to write those things down because those will start to create your bad habits. Taylor's case, I'm speaking for you here, buddy. I know you don't want to lose. I know you don't want to lose your money. So make it a number that if you lose that number, you're okay with that. And when it does, hit that number, stop. Think of it this way. When you're going from point A to point B, so from your home to, let's say, your work, there's probably stoplights along the way. Those days that you hit every green light, you get to work real quick, but you get to work. The days where you hit every red light, you still get to work, but it takes a little bit longer to get there. The point there, though, is when you do hit those stoplights, you stop, because running those stoplights could get you in a head-on collision or someone to come in the opposite way because you ran the red light. So don't go past your daily stop loss. It's frustrating, but make it a number that you're comfortable with, and then you'll start to turn things around.
Absolutely. You know, Merlin, you said take a piece of paper and maybe create 2 columns.
Mm-hmm. Yep.
And that reminds me, in my mind, I mean, I can totally relate to that. I'm sure everyone here can. Like the person that we are when we're emotional, the way that we feel, we're excited, we're scared. Kind of, you know, I personally would draw a picture. You know, what does that picture look like? How colorful it is, how emotional it is. But then when it comes to trading in our trade plan, business plan, it is just totally rigid, full of rules, black and white. There's no color. And really being able to shift into that mindset when we're making decisions and really trying to maintain that mindset is truly very challenging. And we know that whenever we're trading and we're not in that mindset, we're not emotionally where we need to be, kind of numb almost, if you will, where we can just run numbers and take action. Yeah. That's really being able to, you know, put on that trader's hat, if you will.
So I'll make another, I don't usually like equating trading to Las Vegas. But if you look at what Las Vegas is doing exactly what you and I should be doing, which is having a very specific set of rules and never breaking those. I've never been at a blackjack table where all of a sudden the dealer draws 17 and says, oh, I'm going to hit one more time. Never happens. It's an impossibility because it's against all the rules of blackjack. What they're gambling on is that the person on the other side of that table violates the rules and starts hitting or doing stupid things they shouldn't do and becomes inconsistent. Those rules are in place to make the Wynn, the Bellagio, the Luxor what they are today. We usually walk away from Vegas without money in our pocket. Why? Because they're gambling, or they're betting on the fact that most people don't follow their rules. Financial markets are no different. Most people do not follow their rules, and therefore they start to break their rules. They get emotional. I mean, imagine how different it would be if you had a stop loss in Vegas. Instead, there's vending ATM machines dead center of every casino with a little sign that says, do you have a gambling problem? Call this an 800 number as I'm pulling out my next $500. It's the way it's designed to be. We have to flip that script and say, I need to be the house. I cannot violate those rules, and it'll save you a lot of money down the road, but you are going to have losing days. You're going to have losing trades. You'll probably have losing weeks. The goal is to not have long-term losses, and that's about journaling and evaluation of the process. All right, Tillie, so you, I'm just going to try to think of another bad habit one. I'm trying to think of one. In the years I've known Tillie, now I get to pick on you a little bit. Tillie had one issue that I think was a bad habit. And one side of the equation, we could say that not doing enough work is bad because you might be missing pieces of information. Tillie is one of those people on the other side of the equation where she's doing so much analysis and so much work. Where did you find that happy medium, Tillie? Because I know that you like to just analyze things till you're blue in the face. And to me, that could also be a bad habit as it's very time-consuming.
So yes, I can't even speak now because now I'm embarrassed. Merlin has let the cat out of the bag. I have many thoughts in my mind. I have a very busy mind, and I think I've learned that it's okay for my mind to be busy, but the world around me and my market analysis and my trading rules have to be very calm. So, you know, I'm on the inside a very busy mind. And whenever you combine a busy mind with a busy market, you just get, you know, like combustible, explosive, you know, environment. So since I'm like that and the market's like that as well, I really have to be very calm and realize that it only takes me a few hours a week to do all of my analysis. To run the numbers takes, you know, maybe an hour of risk and reward and all the risk tolerance and our expectations for the week. So I think realizing that it's really only going to take 10 to 15 hours a week maximum to manage the portfolio and then to enjoy life more. So I go to the club a lot. There's a Woodside club nearby, and they have a great nursery for the little baby boy.
You might want to define club, Tillie. You might want to define club. Are we talking the discotheque till 4 a.m? Doesn't make you a good mom now.
No, it's a tennis club.
Okay, there we go.
Club, country club. So I go there more and enjoy that very, very much. So I found other things to do with my time rather than just sit around and microanalyze the market again and again over and over again.
Over and over. You know, that's a good point that you mentioned. And I was in a webinar today and that topic came up as well, that there's this this belief that the more time I spend focusing on the charts or focusing on the markets, that the better trader you're going to be. And I agree with what I heard this morning, and I'm a victim of it as well. I find that there's a certain amount that you kind of max out with your abilities. So okay, if I spend this much time, then I should get these results because I can track those results. I used to sit there all day and all night studying the markets, and it didn't make me any better. I mean, I learned a lot, but I started to overthink things and force trades. So what I would encourage everyone to do is, again, go back to having that plan in place, map out what you want to do, and then just do it, right? And I know it sounds very basic, but let me give you an example. What I want to do is I want to maybe map out 3 trades for the day. I will enter my stop loss, my price targets, and my entry in the system. Once I take the time to do that, which should be 20 minutes, 30 minutes, maybe an hour with all the analysis, then I basically log out and let the computer do its thing. I no longer have to sit in front of the computer and torture myself by watching each and every tick. I don't get stressed out. I can relax. I can go golf, or in Tillie's case, she can go back to the gym and go play tennis or just spend some time with her little one. And to me, those are things that will help your trading as well as your quality of life and psychology.
Absolutely.
Joseph asked this one: what do you do if you have too many rules, Tillie? Because we do encourage people to follow rules, and I think it does get to the point where you start to get too many.
Yeah, for sure. So I think that whenever we write our rules, if it's more than an index card, then it's probably too many. If you have a daily agenda in your routine, like what you're going to do today. For me personally, if it doesn't fit on a sticky note, like a little 3x3-inch sticky pad, it's too much. I'm not going to get any more than that done. So I think the same for trading rules. If you really have a whole list of rules, oh my goodness, you're never going to get through the whole checklist, and then that would lead to typically breaking rules because you feel a lot of pressure to check every box. So I think coming up with a consolidated list, I think on average probably if you ask a lot of traders, they could fit their rules on an index card, and they've got them memorized now between their ears.
Yeah. I agree. If you'll start to get to that point where you have so many things going on. It's nice to write it down in a trading plan, and I'm a huge advocate for trading plans where you write out your rules. At a certain point, at the beginning, it's going to be very difficult for you because there's so many things you need to retrain your brain to think in a proper manner. If you have a trading plan, revisit that frequently in your early days, your first couple of years. You should look at it all the time, especially your rules, and say, am I doing these things? I've also encouraged you guys to, if you have that list of rules, every time you break a rule, look and see how much that cost you, because most likely your losing trades are a result of you breaking your rules. Eventually, those will become commonplace. Kind of like remembering to breathe, right? Not everybody here needs to go, oh, whoa, did I just take a breath? I should probably breathe real quick. It's just in our DNA now. We know to breathe. There's certain things you do long enough, you're just going to do it naturally as a trader as well. And Daniel says, this is a good one. Daniel says, also trading while going through emotional shit. Yeah, absolutely. If you are not 100% focused, if you were in a fight with your significant other, you got in an accident, something tragic happened to you, don't even think about trading. It's a very bad. I had one guy on the trading floor that every time he fought with his girlfriend, he would lose a good 5-figure day. We're talking $10,000 or more every time they fought. So as a friend, we used to joke with him when he walked into the trading floor. He'd be like, hey, you fight with your girlfriend today or last night? He'd be like, no, all right, you're good to trade. And we were joking, but we were serious because it has a huge impact on you. If you're not all clear in the head, don't even bother. And no drugs either, by the way.
or even hungover from the next, if you had a long night the night before. We have to be well rested. We have to know if we're tired. But that's really the benefit of coming up with simple rules. And, we all started off with probably a trade plan that was in boxes. I remember early on I had boxes and boxes of just stuff. And eventually it comes down literally to a note card. And those rules have to be simple enough for us to remember each and every day and be able to make the decisions without overcomplicating things. And for me personally, it comes down to, do I want to buy here or do I want to sell here or do I want to do nothing? And, like today on the S&P 500, wanting to buy there was difficult because the data, for active intraday trading was hard to work with. But on Tuesday on the open, the market opened in an area that was much more what we call clean. And there were some questions about what time frames I use. And I think time frames can make a huge difference. You put somebody like me on a short, low time frame without specific rules of exactly what we're going to do, then again, we're human. And I'm going to digress back to that impulsive, trigger happy gal. I'm from Texas. So the Texan's going to come out and I'm going to start firing. So we all realize, it's like someone who smokes, all of a sudden you're around a bunch of, people smoking, and you just don't forget that you smoked for 25 years. So these trading, habits, if you will, are always with us. And I still have one account, and for some reason, that one account performs worse than any of my other accounts. It's got more leverage. And the other accounts, different brokers, they don't have as much leverage. So, of course, I can't trade as large a size, and my performance is much better. So recognizing, I think, what those triggers are and realizing that they're going to be with us. It's part of who we are, but just trying to better manage them and don't expect change overnight.
Yeah, no, it's never going to be a quick thing. Gayer sent this one in, and I think this just goes back to plans, rules, and trusting the plan. Gayer says, Tillie, how about I should buy this. Yes, I should. One more candle. And then all of a sudden, a minute later, you're going, I should have taken that trade. It's kind of FOMO, and, you're second guessing everything. How do you deal with that?
Are you talking about woulda, coulda, and shoulda?
Yeah, those are my 3 favorite wise men.
Yes. So that feeling is, again, just typically reacting to market data in real time and not determining, a day before or 30 minutes before, an hour before, I want to buy here because of risk and reward. And I think that pre-planning every trade, whether it's, 30 minutes before, 5 minutes before, but to go through that checklist of why we're buying with the risk parameters. And I think once someone does that a few times, they begin to see the difference. And it's just hard because trading requires tremendous discipline, and it's hard to follow that checklist. So anything other than checking those boxes is going to be emotional behavior and going to be very, very costly.
For me, Gayer, it boils down to a much simpler approach. You have to trust the process, and as traders or investors, we have a strategy, we have a plan in place, or you should at least. If you don't have a plan or a strategy, then you're shooting from the hip and you'll never be consistent. You're just being lucky. I don't care whose strategy it is. Obviously, I'm with Online Trading Academy, but you guys might be using someone else's tactics or strategy. That's fine. You have to trust the process. Whatever analysis you're doing that says, hey, you know what? Here's how I'm finding the price I pay. Here's how much I'm willing to lose as a stop loss, and here's my target. Whatever process you go through to get those 3 variables of information, trust it. I can't tell you the number of times it's come within 1 penny of my entry price, didn't execute, and then just skyrocketed and did exactly what I thought I was going to do. Yep. You can't get upset about that. It's the nature of the beast. The beautiful thing about what we are all doing is it will never go away. There will always be trading and investing. It might change its name, might change its face a little bit, but there's going to be stocks, options, futures, forex, commodities. There'll be different instruments that show up in the next 20, 30 years. Who cares? There will always be a trade, so don't worry about those ones and shoulda, coulda, woulda. Just brush off your shoulder and move on to the next trade. It's easy. That's an easy one to fix. All right, let me see if I got any other comments coming in here. 3. Yes, these 3 guys are very rich. Shoulda, coulda, and woulda. Yeah.
Yep.
He's right. They're best friends with that guy. Let's see. Kev says, I concur. Never trade emotionally or under the influence of drugs or alcohol. I think I told you guys once on the trading floor, there's a guy who sat next to me, and he was a big stoner, and he came in, and he was just lit up. I mean, you could smell the weed on him. His eyes were bloodshot, and he sat down. And this is 6:30 in the morning. And he sits down, and he starts trading, and all of a sudden I look over, and he's in a very, very bad trade. Like, it was like, oh, my God, you're losing bad. And he was just staring at his screen blankly, and I'm like, hey, do you want me to get you out of that one, man? You're getting killed. He's like, oh, yeah, man. What? Yeah. Closed him out, turned off his computer, and sent that guy home. So, yeah, don't do it. Reaction time is critical.
Wow.
All right, Tillie, let's go to a little bit of chart analysis here. You mentioned something earlier. For those that haven't seen it, I'm going to try to encourage Tillie to do it every week, which will be this Tillie's Market Outlook, which I thought was great. Just some food for thought with regards to market levels. JC sent in this question, which was, why the 240-minute chart, Tillie? Why not the daily? Because on that analysis, you had the weekly, the 4-hour, which is the 240-minute, and then you had the 60-minute chart. So why did you choose that one?
Yeah, great question. Now, that's almost the first thing I think about is like going to the eye doctor.
Yep.
And the eye doctor, they put all those lenses in front of you, and which is better, which is worse, which is better, and which is worse. And finally, you're like, hey, just pick something. And so, there's so many time frames that we could choose. And you all are feeling that, right? If you've been to the eye doctor, they've got way too many lenses. So the market data is like that. There's so many time frames, and I think that going through said time frames, and if you find that you're discovering what you plan to do, where you want to buy and where you want to sell on any given time frame, if you're using a strategy like Online Trade Academy, which is what we're looking for, is institutional buy and sell orders, those orders that have been filled and the probability of there being unfilled orders. So I personally like to think of this as accumulation zones where there's buying and likely to be more buying. Like when Buffett buys, there's a bunch of accumulation, and a bunch of distribution, which is where obviously there's institutional selling, and that selling will continue, of course, until they've continued and no more distribution. So what I'm looking for in a price chart are those areas where there's accumulation, distribution, and oftentimes on a daily chart, all I see is daily data. On a daily chart, I look at the chart and I see the daily high, low, open, and close, and maybe I see a big movement from the previous day or the next day, but I really don't see inside that day what I need to see. I need to see what happened inside that day that caused the market high. I need to see inside that day what caused the market low, and I need to look at a lower time frame, and whether it's the 240-minute chart, the 180, the hourly chart, those are different time frames, and we're going to see multiple structures of accumulation distribution. And the 240-minute chart's a pretty popular chart where we're looking for that formation.
I actually use them both. That's a beautiful thing. I have multiple monitors here, so I don't normally start the weekly, and that's obviously a matter of personal preference. But I start at the daily. I go daily. I'll look at the 4 hour, the 60, and then the 15, and those are kind of the four I'll look at. If I can't see the big picture on the daily, I'll step back to the weekly. Tillie does a bit more longer term stuff than I do, more normal, so I don't use the weekly. But again, it goes back to the comments I make before, which is like, how much salt do you want on your burger? It's all a matter of personal preference out there, and it's a challenge kind of to find what fits for you. But the more you do it, you go, I'm more comfortable with this time frame. And there you go, stick with that one. Tom T asked this question. Tom says, I was looking at buying some Walmart and Costco to my long-term portfolio, as I think retail is making a big comeback. What do you think? So I don't know, you want to go through some chart analysis here, because I know people like looking at charts. So do you want to share your screen, or do you want me to drive?
Sure. Yeah. I'll share my screen.
All right. Let's do it. So guys, we'll have Tillie go through the Costco and Walmart here. She shares her screen with us. I will bring that up for you. There you go. All right, so this is, by the way, for those of you looking at this right now, this is how she sets up the analysis for the weekly outlook that's going to be up on Sunday, hopefully Sunday afternoon. I'll post that one. But this is kind of her setup, and you can see it's the weekly on the left, the 4 hour in the middle, and then the hourly on the right-hand side. So just walking through the viewers that might not be able to read the numbers on the screen there. So, okay.
Yeah. So the chart on the left is the weekly chart, and I'm going to go ahead and maximize that chart. So this is the S&P 500, and sometimes the platform is more friendly than others, but I have a few different platforms, and let's see here. I'll change the symbol to Costco.
All right.
And for those of you out there that have a laptop versus a desktop, then this is my laptop. So I do a lot more work upstairs on my desktop. So I like to just take a look at the weekly chart overall, kind of the big picture, and recognize that, Costco here is trading, kind of sky high like the overall market. So I think today it closed at $300.53 a share.
Yep.
So what we really want to start to look at here is inside this consolidation range, what's happening. And we can begin to do that on lower time frames. So from the weekly chart, we can drop it down, and we can just go, like we were looking at the daily chart, talking about the daily chart. So what can you see? What can't you see? Kind of thing. Mm-hmm. And, on the daily chart, we will be able to see plenty. And so here, as we look from current price, let me see if I can get these candles a little bit bigger. So there we go. So bear with me one moment, these little guys here. So on my desktop here, there we go.
All right.
So know that you can always zoom in there and make things real big, real fast. All right, guys. So from current price, up above, price obviously has fallen from these highs. So up near $310 a share, and even down to $307. there's a lot of distribution here. So even if prices attempt to rally, they're really going to struggle at 307 all the way up to 310. And that could definitely cause it to not go any higher for quite some time. But what could also prevent it from dropping significantly is below these lows down at $290 a share. There's where we can see a lot of buying, and the market was very, very strong. So that would be a lot of demand or accumulation. And that would keep the market trading inside this range. So as far as, a strategy, as long as we factor in that we're expecting the market to trade within this range for quite some time, then we can, either, I think this was more of a longer term.
Yeah, I think so. If it's going in the longer term account, yeah.
Yeah. So
do you ever I'm gonna say void something out? Okay, so what I mean by that is if I look at the chart you have on your screen there, and I'm gonna I'm just trying to find my damn cursor. I got so many cursors going on the screen. I'll put myself over that one. Let's see. Nope, I need to go. There we go. When I'm looking at this bad boy, you notice that daily time frame that you have there, and actually I went to my screen. It's I'll go back to that. There you go. Over the past 6 months since February, it's chop, it's ugly, it doesn't look good. And I'm thinking for Tom, if you're looking to buy Costco for your portfolio, you obviously want it to be looking good or, having sold off in an uptrend. But this chart, I don't know, I just don't see it looking good as a buy. I just, I'm zooming way out here. So now I'm on the daily and I'm going all the way out to, the lows of 2018. That looks great, but really for the past 6 months, it's done nothing. So I don't know if I would feel comfortable buying that one right now, especially now that this market's ripping to all-time highs and this thing seems to be slowly drifting down. I don't know. Technically, Tillie's right. You got these big ranges. So as an active trader, there might be some good opportunities here, but I'm not sold on this one needing to be in my portfolio because it's just going sideways. And I don't know whether you look at that type of thing as well, Tillie.
Yeah, absolutely. We definitely need for the overall market to show a lot more strength so that this retail sector will do better. And I think that, Costco obviously is a company that's done fairly well during the pandemic, but they have other revenue problems as well. So all retail companies are still, even though they may be busy like Costco, how many people do they actually have in the store compared to what they did 6 months ago? So, I think that we have to see a lot more strength come into the overall market. And even this quarter, for the next 3 months, we could expect to see a lot of sideways trading, that range bound trading, while all this pandemic and everything is priced in.
All right, next one on the screen. Walmart was the other one that Tom wanted, and there's what I got for Walmart, guys. And I would make the same case here. The only thing I threw these moving averages on just for fun, just to see where they would line up, and you can see that today's candle on Walmart kind of bounces off that 200 period moving average. We didn't close below it. But I would echo the same thing. I don't feel very comfortable with this one. Look at the 20 period moving average, guys. It's just almost purely down since May. If that's the case, then I don't believe you should be thinking of buying Walmart here. It may actually be a case of shorting Walmart at supply levels because that short-term trend since mid-April has been aggressively down. It was up near 135 and now it's down to, below 120. Yeah, to me, those, I don't know. I don't like either one of these two for a long-term investment. Not in my portfolio anyway. I'm sure others may disagree with me, and that's absolutely fine. But, you asked our thoughts on Walmart and Costco. What would you say with Walmart, Tillie? Would you add it in? I mean, this is Walmart, of course.
Well, I think it looks very similar to the Costco chart in the retail group. And so we see that those different groups oftentimes trend very similar. And again, Walmart has done, fairly well. And I imagine that's why this investor is looking at those companies. People have been going to Costco and Walmart a lot more than they've been going to the pizzeria.
Because they're the only ones open.
Local bar.
Yeah, right.
Right on. So we've been having to buy our pizza at Costco and Walmart. And I think that through all this pandemic, a lot of stocks are going to go sideways. And if things get worse, unfortunately, they're going to swing back down. And then that's when we're going to have a buying opportunity. So if the market has another, pandemic shock and it does drop another 20%, I'm not making any recommendations for anyone, but, think about it. If the market drops 20, 30, 40%, and then the Federal Reserve steps in and the government with stimulus and all types of things to help the stock market recover, that we do know eventually over time that prices do oftentimes recover and that the market over time will make all-time highs again. So just realizing longer term investing, whenever the market does drop 20, 30, 40, even 50% like it did in 2008, that I know it's hard oftentimes because, maybe we bought, the last quarter up high and then have to, sit there and suck it up. Mm-hmm. But really thinking about when prices do drop and they do decline, where those lower buying opportunities will be.
I agree with you. If it doesn't look great to you, then you should wait, right? There's no point in rushing. That's one of the, I guess bad habits we can have is forcing a trade that we may not necessarily want. Let's do two more real quick. Rajesh says Intel, INTC. I'm going to bring that one up here on two different charts for the viewers to see out at home. Here's the Intel chart. Again, it also is starting to look similar to your Walmart and Costco, right? It's looking a bit weaker. It's below the 20-period moving average. Bounced off the 200. Before I let Tillie analyze this one, I want to show you this chart here. This is where I think it's like 8 or 9 of the S&P sectors. Your consumer staples, industrials, and healthcare, energy, financials. You'll notice that one of the best performers on the year since January 1st is semiconductors. And of course, Intel's a major factor in that. The semiconductor sector is up 4%. The major one here is going to be technology overall, XLK. It's up about almost 11%. And then of course, that's because of Amazon and Netflix and Facebook, etc. But semiconductors, Intel, what do you think, Tillie?
Well, we've got a lot of selling up at $65 a share. So again, that's another problem that we see that all these stocks have not been able to this week or last week. The last 3 weeks, the market has not been able to trade above the highs. And that's the case for these individual companies as well. Mm-hmm. So Intel has a lot of selling pressure up above near 65. And we would need to have, enough confidence that wherever we buy, we know that there's going to be some selling there. So, if it swings down to like $50 a share or even 47, the closer you get to 47, there's a low there with a lot of accumulation. So that would be probably, it's always better to buy at 47 than 58.
Of course it is. Much better. My analysis on this one, guys, you kind of look at things from a fractal nature, right? If you look at the intermediate trend, which is going to be since March, it's been on a really aggressive uptrend. It's still making higher lows. This could be a potential buy point, but I don't think it'll be a big move to the upside. I think it'll be a smaller move. If you're looking at the shorter term one, which goes back to, let's say beginning of June, we're in a downtrend on this one. So I think if you get below today's low even, get below that 57.50, then I think you're looking at short opportunities here and maybe headed back down towards that $47 mark. Right now, it's not a clear buy point, but it certainly looks like it could be a shorter term buy point based off this demand. All right, last one. HD for Fink. HD, Home Depot. Wow, that's a gorgeous chart. That is a beautiful chart since mid-March. Of course, they're essential, right? I mean, you're looking at a company that went up over $100. So what, a 67% move in a month and a half, 2 months. Pretty impressive there. You probably have it up on your screen, but I've got it up on mine. What are your thoughts on Home Depot?
That I think today's low right at 242.5, right in there. If it can hold these lows, then I definitely have bullish expectations. So if it can hold today's low and go higher, then it'll attempt to retest those highs. So this is way more bullish than the other sector, with Walmart and Costco. Right.
Yeah, and I think this one really just is looking for a pause, right? It's had just such a parabolic move, which is not normal for Home Depot. I think you'll probably see this one drift down a little bit. I feel like it needs to take a bigger breather here. And I saw in here, Joseph says, HD around 224 for a long. Yeah, I could see that as well. I'll put a line right there, right around 224. You're actually looking at the origin of this move up here. That would be right around the 200-period moving average. That would be a pretty good buy point for me as well on this one, around 225, 224. There we go. All right. Cool. All right, we could go on and on and on and on, but I got to wrap up and do some other stuff here, Tillie. Again, thank you for coming on, sharing some bad habit stories, talking about market analysis. Always love it. Are we gonna get a video for this week for your market outlook?
You bet, Merlin. I really enjoy interacting. I loved answering the questions about the charts. And this week's high was right about 314 on the S&P 500, which is one of the zones identified in last week's analysis. Yep. And this week's low also near $303 a share. also one of the lows as well. So the market's trading inside that range as expected, and love to continue doing it. Love the questions about the charts, and my goal isn't to be like some spy guru. My goal is that everyone that's listening and managing a portfolio, kind of our expectations for the week, if we're expecting to be very range bound, then we could go into the week and manage things a little bit differently. Mm-hmm. And then eventually, whenever we do drop down to those much lower lows, those will definitely be, a different environment to expect big rallies, or rally back up to those all-time highs where we can expect some big drops.
Well, I think the important part here is it's setting expectations. And you guys need to remember, everything works until it doesn't. So what I really liked about what Tillie did is it's just saying, look, these are areas where she feels that there is going to be a pause based off of accumulation or distribution of buyers and sellers out there. So to me, that's critical in mapping out your trades for the week. Doesn't mean they're always going to hit. Conveniently, 2 of those hit pretty solid on this week. So congrats on that one. I'm looking forward to seeing more of it, Tillie. So thank you so much.
Awesome. All right, cheers, everyone. All
right, take care. Guys, that was Tillie Allison-Harris giving us some insights into the overall markets, also looking at some nice charts out here. So those of you who wanted to look at HD and Intel and others, thank you so much. Where do you get that chart? PB&J says, if you go to TraderMerlin.com, I don't know if this will work. I think I tried to do this the other day where I actually brought up not TraderMerlin.com. Let's go to YouTube. You have to go to YouTube first. YouTube, and I will share that screen with you. There's full screen. Of course, you can see I like to listen to a lot of music, so it's all music on here. But we'll go to / or just search for TraderMerlin. One word. And once you get to my page there, you'll notice that there's a couple different tabs. It's going to look different because I'm the admin. It'll show up here right in the front page. It'll look like this one over here where it says Tillie's Market Outlook. Or you can click on the playlists, and there's a video just for Tillie. And I'm going to start to build out a better look and feel. I'm not a graphic designer, but I will do my best to make this look a little bit better. And I want to break it up by category because, we really kind of do 3 things on the show, right? I have the main show we do every day live, which you guys are all a part of. We have the chart of the week, which I do Saturday mornings at 10 a.m. And then the Market Outlook by Tillie, which I think I release it at 1 p.m. on Sunday. If that we may change that time, but it gives me a little bit of time. But those are the 3 kind of main segments for now. I'm going to see if I can maybe add some more stuff a little bit later on. But that's what I got cooking for you guys right now. All right, let me real quickly... These shows have been going so long, guys. I now have to go buy more storage space for the podcast. It's crazy. I hope you guys enjoy the show, and if you have people who are podcasters, tell them to go on iTunes and download the podcast or subscribe to the podcast and leave a comment. That would definitely help me out big time. But yeah, I have to buy storage space for all the podcasts, which I put up right after the show anyway. Okay. Tomorrow, right? We've got some earnings announcements to talk about. So let me run through that real quick before we wrap up. You have Nike reporting earnings. That is... No, that's not... This is not right. Hold on a second. Let me show you what happened there. Nike was supposed to report earnings, and they did. Let me show you the earnings announcement for Nike. This is... Oh, I don't have it. Nike missed by like 300%. I mean... Sorry, 2,000%. They're supposed to make 2 cents. They lost like... I don't know, 59 cents per share. It was absolutely horrible. It was really, really, really funny to watch them lose. So that number, this has already happened today. This is for tomorrow. Really more about the U.S. for tomorrow. 1 hour before the market opens, you get personal income and spending numbers, which is going to be interesting. What I noticed right here, you guys saw the chart of the week. I'm going to mark on this screen here so you guys can see, because to me this is going to be an issue for the markets. There it is. I'll bring that over here. And the reason I say that is I'll draw it for you real quick so you can see. I did a chart of the week on these 2 numbers right here. And to me, if you can manage your life with those numbers, you are going to be rich, frigging dripping with wealth. What do I mean by that? Well, if you're cutting your spending by 13% a month and you're increasing your income by 10% a month, you're going to be freaking wealthy as hell. I mean, incredibly wealthy. And I saw those numbers and said, well, holy cow, that's going to be the chart of the week. And that was, in fact, the chart of the week, I think last week or 2 weeks ago. I can't remember. I do so many of these things. But look at the change. See, this right here is a positive number. You're making more than you're spending, or you're cutting your spending so much. This number now, this second box I'm putting on here, now we're back to the danger zone. All of a sudden, income dropped by significantly, and spending is increasing sharp. There's no contraction in spending. It's actually more spending. So all of a sudden, the formula goes back to what America knows, which is this box on the left-hand side. This right here is good old U.S. of A. We'll run that over here. That means the D word, debt. Income drops, spending goes up. Oh boy, here we go again, putting ourselves back in a bad situation. So curious to see what this pans out, what those numbers actually are. That's what comes out tomorrow morning. That'll be an hour before the market opens. And then you have University of Michigan consumer sentiment is not really that important anyway, so nothing big there. All right, that will do it for today, everybody. Thank you guys so much, and also thank you for the great participation. If you guys have any topics you want me to cover, obviously this was kind of spurred off of a listener question. Thank you, Domesticated Rat. I did like Tillie's video. I thought it was great as well. You know, she's a pleasure to have on the program, and I love her analysis of the market. So I will release that one when she sends it over on Sunday, probably around 1 o'clock. And of course, I do the chart of the week on Saturday at 10 o'clock, which is not as well received. You guys don't like that as much, but that's okay. I'll still do them anyway because I enjoy building it. All right, that'll do it for me, everybody. Be careful out there tomorrow. Before the market opens, you'll probably see a little bit of a whipsaw because of that economic data. Other than that, not too much going on. I will see you guys on the show. For Friday's session, I'm going to be all alone with a nice glass of whiskey this week. I had a good trading week, so hopefully you did as well. I will see you guys tomorrow. Take care.